it's all about the AI investment, you know, what's happening, this CapEx spend versus the revenue, and at what point do investors say, show me the money, you know? So it's like, okay, we're going to invest trillions and trillions. Okay, that's fine. We'll keep funding it because it all is growing and it all looks great. But then you look at the actual revenue generated and you look at what's happening and you're like, well, okay, when is that revenue actually going to grow enough to cover what we're still going to do for the next few years? Like Meta says, oh, well, we're going to grow our investment next year to this, and we're going to do it again to this. And it's like, okay, but are we actually seeing some return on this? So the market's been going along with it and it's all been fine, but there is going to be some point when investors say, okay, who are the winners and losers? Who are the weak links in this? Like Oracle and Meta, I'm sort of looking at them and thinking, watch out. So this is the S&P, and I just wanted to point out, like, so super strong still, right? Which is fine. Yeah. And so it can absolutely turn back up. The S&P is certainly not like the ASX at all. But I did point out that we had that weekly sell pivot last week. So that's that first sign, and we got it. And then this week we got strength, and we actually got resistance up around where I expect to see it. If the big boys are selling, it basically did what I wanted it to do this week. Looked good and then got hammered towards the end of the week. So the big sellers were there. So then the next step is to see it actually break that 10-week moving average and do that next little sort of wave down. So it's not confirmed it's going to do that yet, but the setup is now there with the weekly sell pivot where I'm watching it from the point of view of let's just see how this goes. And
it's interesting because there was like this expectation like, hey, the government shutdown has ended. Surely that's a positive news for the market. But then the markets turn around and gone, well, actually, we're expecting all these federal agencies to come online and all of this data to come through that might not be that great. It might be a little bit shaky. And so there's been a kind of a de-risking effect that's gone across the bigger names. So
look at this. So here's the deal that they did. Where it's like, oh, we're going to be billions and billions. And this is this circular economy thing of all that money going back and forth in AI. But Oracle's the one that stands out because they're going to be using debt, whereas the hyperscalers have got the revenue generation to fund.
I've got it here. The debt to equity ratio is close to 500%. So contrast that to Amazon, which is about 50%, and Microsoft at 30%. And Apple and Alphabet are like 10%.
And so look at the heat coming out after that deal was announced, rallying from 225 up to nearly 350 on that announcement. And look at this heat coming out of it now. Yep. And this is a real reality hitting in, 300 back to 217. This is one to watch to see how it responds in the next few weeks. And the way it's set up here, I mean, there's nothing stopping this now really doing this.